Welcome back, America, to Sound Retirement Radio, where we bring you concepts, ideas, and strategies designed to help you achieve clarity, confidence, and freedom as you prepare for and transition through retirement. And now, here is your host, Jason Parker.
America, welcome back to another round of Sound Retirement Radio. So glad to have you tune in into this episode, number 420. How do presidential elections impact the stock market? But before we get started, I like to renew our minds, and so this comes to us from Hebrews 12:1. Therefore, since we are surrounded by such a great cloud of witnesses, let us throw off everything that hinders and the sin that so easily entangles, and let us run with perseverance the race marked out for us. And then something fun for the grandkids. What did one snowman say to the other snowman? Do you smell carrots? Will the outcome of the next presidential election have an impact on your investment strategy? Will it have an impact on your financial plan, your retirement, your future? Will you be making changes to your investment depending on who is elected? Remember that articles, links, and resources mentioned in today's podcast will be available at soundretirementplanning.com. Just click on episode number 420. I had a client call me just before President Obama was elected, and he was convinced that the stock market was going to crash if Obama was elected, and he wanted to sell everything and go to cash. Then, just before President Trump was elected, I had a client call. She said that if Trump gets elected, the market's going to crash. She insisted on selling everything and going to cash. In both instances, I tried to talk them out of making this extreme move with their investments, but in both cases, I was unable to get them to stay the course. In both instances, they sold everything in the pursuit of seeking safety because they were convinced that the election would have a major impact on the stock market, that it was going to have a major impact on their financial plan, that it was going to have a major impact on their retirement and their money, and they just were seeking safety. So what happened? Did the market crash as predicted by my clients? Before we dive into the data, here are a few quotes that you may find helpful. Peter Lynch said, "Far more money has been lost by investors trying to anticipate corrections than lost by the corrections themselves." Jack Bogle said, "The idea that a bell rings to signal when to get into or out of the stock market is simply not credible. After nearly 50 years in this business, I don't know anybody who has done it successfully and consistently. I don't even know anybody who knows anybody who has." And then John Templeton once said, "The four most dangerous words in investing are, 'This time it's different.'" So let's look back over the last 42 years. We're going to look at how the stock market did during the years of Ronald Reagan and George H.W. Bush, and Bill Clinton and George W. Bush, and Barack Obama, Donald Trump, and Joe Biden. A couple of things to consider as we look at this data. Number one, I used the S&P 500 to measure the performance of the market. Number two, even though elections are held in November and the president takes office on January 20th of the following year, the data that I used in this analysis is for a calendar year starting January 1st of each year, not on January 20th. And then a good reminder from the Bureau of Labor and Statistics, they have a CPI inflation calculator that says $100,000 in 1981 had the same buying power as $353,644 in October of 2023. Okay, so Ronald Reagan was president from 1981 through 1988. If you had invested $100,000 on January 1st of 1981 and just held it through 1988 in the S&P 500, $100,000 grew to $278,522. It was a 13.66% annualized return. Under George H.W. Bush from 1989 to 1992, if you had invested $100,000, it grew to $177,655. This was a 15.45% annualized return. Bill Clinton's full term was from 1993 through 2000. If you had invested $100,000, it grew to $354,180. This was a 17.13% annualized return. Next is George W. Bush. His full term was from 2001 through 2008. $100,000 fell in value to $78,383 during this time. It was a negative 3% annualized return. Barack Obama's full term was from 2009 through 2016. $100,000 invested in the S&P 500 during that time grew to $291,580. It was a 14.31% annualized return. Donald Trump was president from 2017 through 2020. If you had invested $100,000 at the beginning of his presidency, it grew to $180,000. This was a 15.89% annualized return. So far, Joe Biden, from the beginning of 2021 through October of 2023, $100,000 has grown to $116,211, a 5.45% annualized return as of October 31st, 2023. Now, if you had just invested $100,000 back in January 1st of 1981 and held it that entire time, $100,000 grew to $7,594,284, a 10.86% annualized return. During this time, we had 4 Republican presidents and 3 Democrats. Some of the challenges we have faced over these 40-plus years include the savings and loan crisis, the Gulf War, Desert Storm, a terrorist attack at the World Trade Center, a bomb exploding in the federal office building in Oklahoma City, a partial shutdown of the U.S. government, September 11th terrorist attacks, an Iraq war, Afghanistan war, Hurricane Katrina, the 2008 financial crisis, swine flu, COVID, and these were just a few of the challenges that we had to overcome. The upcoming presidential elections often spark questions regarding the potential impact on financial markets. And this time of year, people are getting a little antsy, and they're starting to ask questions like, what actions should we take regarding our investments? Who is president is very important. The president has played a significant role in the direction our country is headed. But the key lesson is that who is president is only one element of what drives markets. The stock market is resilient because the American people are resilient. We don't want to allow presidential elections or political leanings to cause us to make emotionally charged, extreme changes to our investment strategy or our financial plan. In the show notes, I'm going to provide a link to an interactive website that examines market and economic data for nearly 100 years of U.S. presidential terms, and this chart shows a consistent upward march for U.S. equities regardless of the administration in place. And this is a good reminder that shareholders are investing in companies, not a political party. Companies will continue to produce goods and services that make our lives better. When we become investors, we believe that this desire for goods and services will continue, and the businesses are going to continue to innovate and continue to supply us with the things that we want and need. We should not buy into the fear-based message that suggests that we're going to be going backwards, that we're going to start growing vegetables and trading our vegetables for little flakes of gold. Benjamin Graham once said, "The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are likely to get you to where you want to go."
Information and opinions expressed here are believed to be accurate and complete, for general information only, and should not be construed as specific tax, legal, or financial advice for any individual, and does not constitute a solicitation for any securities or insurance products. Please consult with your financial professional before taking action on anything discussed in this program. Parker Financial, its representatives, or its affiliates have no liability for investment decisions or other actions taken or made by you based on the information provided in this program. All insurance-related discussions are subject to the claims-paying ability of the company. Investing involves risk. Jason Parker is the president of Parker Financial, an independent fee-based wealth management firm located at 9057 Washington Avenue Northwest, Silverdale, Washington. For additional information, call 1-800-514-5046 or visit us online at soundretirementplanning.com.